Welcome to Momentum Monday. Today is February 20th, sorry, 2023. Howard, what's going on?
In my office. We got the extra day off, so we're doing this from a different location. You are in my Trends with Friends office.
Oh, you have a special office for each of your podcasts.
No, I'm just in my regular office in Phoenix. We're enjoying our first, I think, over 70-degree day of the year. It's very strange. Usually we've had a month of 70-degree weather, but San Diego, Southwest and Southern Cal have been shitty 2 months.
Yeah, it's been raining a lot, but it's not too bad. We can use the rain, so no complaints.
All right, so catch me up.
And the market can use, some consolidation, some pullback after that big year-to-date push. And we already discussed that the worst performers from last year are significantly outperforming so far this year. Like I think we mentioned that Tesla, Align, and Generac, they were like the three worst performers last year. They were kind of the three best performers this year on the Nasdaq 100.
Right.
And the one thing that's kind of changing last week is that rates are starting to perk up, and the US dollar is starting to perk up. And this kind of coincided with a pullback in a lot of those high beta, high risk assets, companies with most of them no earnings and very high price to sales ratio. So it'll be interesting to see if we see a divergence, because so far year to date, many of them have been kind of moving in tandem as a group, regardless of their individual characteristics. And now, after they reported earnings, they kind of start to diverge, with gap ups and gap downs. So this is what's going on. The market is still above the 20, still above the 50, most of the major indices. So still innocent until proven guilty, as they say. And let's see if they can attempt another bounce next week. Still earnings season, still hundreds of companies left to report. I think NVIDIA is the big one that reports in a couple of days. It's been definitely a big leader year to date, even though it's still far from its 52-week highs.
But doubled off its lows. It doubled off its lows.
It's been a big price leaders alongside Tesla. It seems like it's a great barometer, NVIDIA and Tesla, of risk appetite.
Yeah, I think in software it would be Cloudflare. Yes, Tesla, NVIDIA, Cloudflare, they all have big bounces, almost doubled peak to trough. Because those are the high price to sales and high multiple leaders software. Cloudflare's, cloud, Kathy's are. So it's a pullback, going back to the Qs and the semis, it does feel, I'm optimistic, but it doesn't feel like a new bull market. It just feels like a nice, reprieve from the bear market. But the good news is there's chances to get in, like these companies are giving you chances. Generally in like a breakaway new bull market, it's just like NVIDIA won't look back, Tesla won't look back. So we'll see. This is kind of a wait and see mode to see if there's real buying at these interest rates. The home builders rolled over a little bit. New home sales were disastrous. So some of the breakouts are, aren't fully working yet, but they're just building these right side bases. The financials probably look the strongest. Not as a whole group. There's just specific names that are showing up. I've talked about Interactive Brokers, but like I've talked about Goldman's hated cover of magazines, and I don't know why it's hated at this point. Relative strength looks pretty good. So the financials look great. No one really talks about them anymore other than with disdain. Crypto still has the headlines, which is, a good backdrop. Rising rates, it's a good backdrop for financials to continue to run because people still speculating on crypto, and it's, the true financials in this interest rate environment that are gaining. So I think the backdrop for financials continues to look good. IBKR is kind of my proxy there, but there's a lot of financial names off the beaten path. Just mid-cap names that you've never heard of that are going to new highs. What other sectors are you seeing?
I mean, they're like really good representation from various sectors. Like, for example, on Friday, Deere broke out on strong earnings and it's building a new base. As we know,
Caterpillar's strong too, I think, in this.
I mean, those were kind of the leaders from last year, and year to date, they're definitely underperforming as capital rotated into other sectors, like mostly tech. And now they're starting to come back. So Caterpillar, they're building a new base. Also, I noticed.
Well, the industrials are strong. Like just from a more technical perspective, XBI, I think, is the industrial ETF. Or no, I forget.
XLY, I think. Yeah, XLY.
So, I mean, that looks strong. The energies still look really strong.
Some of it. I mean, it's kind of
broke
pulling
down.
back.
So, yeah.
Mostly because of oil, but the rest of energy is
holding well. What about OIH?
OIH, it's, big breakdown on Friday.
Okay.
Go seems to be coming back. Definitely some interesting setups on a weekly, obviously kind of sold off on Friday, but on a weekly, it's just kind of going sideways. BTU, Arch. Not too bad. Obviously, not.
So I think the people that bought the panic in December have done well, for sure.
Yeah, especially in tech. Absolutely.
Yeah.
I mean, Tesla has doubled since then.
So the winners from last year have been basing, so we may see a rotation.
Yeah,
Tesla doubled and it's still under the 200-day moving average.
Exactly. This is what happens in bear market. So it'll be interesting to see if we see rotation into biotech, because biotech hasn't really done anything since the summer, basically since
it held up well
August.
And then hasn't done anything.
So just kind of going sideways. So it'll be interesting to see, because we know that bull markets, if this is a bull market, we don't know, they correct through sector rotation. So it will be interesting now that software and semis are probably pulling back or consolidating, depending on NVIDIA earnings. If we see some rotation into biotech, just to keep up the indices strong. Other interesting topics are obviously AI, still very hot.
Yeah.
Theme probably will remain a hot theme, maybe the entire year, just depending on the market.
The best AI company, in my opinion, is Google, and they're the weakest.
Yeah, so. Google and Microsoft. I mean, all of them have AI, and the little one that is speculating.
But I think Google has AI. Like the amount of nonsense that I'm hearing and the amount of bad AI that's out there right now. Right, Google's still in the driver's seat, so I don't think AI is like a fantasy still. It's fun, but true product stuff is a long way away.
If you're correct, then this is a buying opportunity, because it's been definitely underperforming.
I haven't been the hottest hand in the world, but yes, I've been adding to my Google, but again, below 80, I don't know. We'll see. We'll worry about that when it comes, but if you're not going to buy Google at a trend line, and I think it's like the lowest valuations it's kind of traded at in a long time. But then again, it always is at a low valuation before they miss numbers and do something. So again, there's no trend anymore. There's a very long-term trend in Google, which I'm playing, but Microsoft has a lot of the attention. Has Microsoft just gotten any traction? Yeah, kind of reversed last week.
I mean, it's holding better than Google.
I think we're in that type of market where it's just, you're going to have to be a little more nimble, and you can't fall in love with any one trend. And I think the one trend that works is the one that we hate, which is banks, but guess what? All my money's still at a bank. It ain't in a wallet on the blockchain. And so for all the trillions spent on crypto, 99.9% of my money's still in the real world, physical bank.
the car market, especially the used car market, also continues to be strong. On Friday, we saw
Huh. Oh my
AutoNation
goodness.
breaking out to new all-time highs.
Holy.
Here it is.
The opposite of Carvana.
Yeah, I mean, Carvana, I think they report earnings.
No, but I mean that bottomed in 2020 like Carvana did and never turned. And
Yeah, I mean, this is Carvana longer term. Obviously, it's not looking pretty. I think they report earnings this week as well.
no, but the same chart and through 2021, and then they've gone in opposite directions. So I wonder what.
So I mean, they just manage them in a different way. So it's just AutoNation, then the other one, PAG, also all-time highs.
Holy,
So,
what about AutoZone? I can't
but
believe
AutoZone it's parts, right? It's also all-time highs.
out. I mean, look at the monthly on AutoZone. I mean, oh my God.
Yeah, because they keep buying back their shares.
Who cares? Like,
yeah, I know it's incredible. Like 100 to
completely pummeled. You could be the thing
26.
smartest tech investor. I think it's done better than Bitcoin AutoZone.
Doubt that.
Well, you know, but like
better than the
volatility wise,
better than the Qs, yes. Better than the Nasdaq 100.
Look at that trend.
Incredible, yeah.
Fucking selling grease and to crazy people that like won't sell their car. America is a big ass country, is what AutoZone, and Americans love their cars. I mean, AutoNation and AutoZone, who would have? And then the internet version of it, the scammy version, Carvana is at zero. So the markets, I think if you put those three charts up against each other, you really realize that long term, the market, you know, short term is a voting machine. The market can confuse you, but long term, man, when it comes to results,
it's a weighing machine.
It's a weighing machine, man. The Carvana was all sauce, no meat, and AutoZone and AutoNation just selling picks and fucking shovels. The old-fashioned way with some margin is a hell of a good business. So I think this shows that if you don't have margin in this market, or if you don't have profits, you know, you are screwed. And I think that's why the S&P is just held up better. I mean, there's just deep profits in the index, including their tech, the tech components that control it. So I mean,
the one
in the end, it's really, last year was really a punishment of the stuff on the edge, anything that was like far away from profits. And that's just that move in rates. So we, you know, pull up the rate, 10-year rates is the rate to watch. And that's a 20-year one. I don't know what the
I mean, I think it's TNX, but just doesn't show up here. But it's TNX, the 10-year rate.
I mean, what a jihad. So again, I can't predict rates. It's just too many factors. But you know, everybody's watching them, and that makes them even harder to predict right here. But the 10-year up against, I don't know, 3% which is
the 1 year is 5%, Howard. When you have the 1 year treasury,
I just don't know how you turn that down.
You're paying 5%.
Yeah.
For a lot of people, you know, they'll go with it instead of
I can't give me a good reason why, you know, to try and scratch out 12 to 15% with all my time investing, assuming you're not going to index. I'm not saying you shouldn't index, but you know, versus a 5% sure thing. 4.5% sure thing. Of course, you got to pay taxes on that. But for wealthy people, the banks have become like interesting, boring, and you know, doing things the old-fashioned way are not horrible. And then you just look at that AutoNation, AutoZone, Carvana trade, and you realize unless your companies that you're investing in have profits, it's going to be very tough out there.
Yeah.
So the market's just saying, like, people can't look out when the 1 year rate's trading higher than the 10-year rate. Like, people are unsure of how things are going to look.
Yeah, there is a chance that we could enter recession at some point later in the year, but so far the market doesn't seem to worry, at least.
And the energy stocks, granted the sharp pullback on Friday, the energy stocks are saying no recession.
Yeah, as of now, they're still above the 200 days. So yeah,
but that can get ugly quick. So it's just not like put all your eggs in energy here. And then Europe looks strong, man. Like Copenhagen, like there's just a ton of countries that are strong. London, and the European banks and the European oil companies are stronger than the U.S. versions. And so I don't know if that's just not Singapore. I'm talking about Europe. So I don't know
Yeah,
what.
yeah, yeah, yeah. This
What
is
is
Spain.
that?
I was looking for
Spain?
Spain,
Jesus.
and just France, just going over the different countries.
Look
But
at Italy,
they're looking
EWY.
okay.
Like fucking Italy is working. Italy never works.
Yeah, I
Italy
mean, longer term
50%.
hasn't really worked. It has been going sideways forever.
I know, but it's up 50% off the lows.
Yeah.
Country. Like nothing's happening in Italy for it to move 50%. So there's just the money's staying in the market. It's looking for things. There's speculation under the surface that's happening. I think the big thing is people are still saying no recession. Like money is saying no recession. Things got a little too oversold in tech.
It just
People,
depends how you look at things, Howard. I think the retail report, when was it? Wednesday? It came out like what, 3.6%. If you, and inflation is 6.2. So if you remove inflation, we kind of have negative retail growth.
No, don't get me wrong. Like there was a great trade in Tesla, there's a great trade in some of these tech stocks, but chasing them up 50, 70, 100% when the macro hasn't really committed to changing. We are closer to a spot where the Fed might decide to stop raising, but they don't have to, especially with with inflation still and low unemployment. And again, I say low unemployment because who knows. But I don't know. I think you can pick and choose and try and invest, but there is some leadership at least.
Oh, definitely. And in quite a few different sectors. So there's definitely a lot to choose from.
All right, buddy. Well, have a great week.
All right. How are you too?
See you, everybody.
Bye.